It's actually been in focus. Gensol Engineering, the rating agencies, CARE as well as ICRA, they have downgraded the company owing to the default grade, and they've also highlighted delays in debt servicing, among other issues. To clarify on all of this, we have Mr. Anmol Singh Jaggi, the chairman and managing director at the company. Hi, Anmol. Good morning, and thanks a lot for joining in. Well, please respond to these, rating agencies, what they have put out. One is in terms of the debt servicing, the troubles on default, point number one. Point number two is they have reported on, false documents being provided as well. So please respond to both these two.
Good morning, Nigel and Mangalam. First of all, thank you for providing me a forum to address these concerns. I would like to start by saying that I am a son of an army officer and I am a very committed businessman and a person of high ethics. On the loan default that the ICRA and CARE have been mentioning, I want to mention that Gensol Engineering has always consistently been a profitable company. Our revenue in the first 9 months is more than 1,000 crores. We have grown by 40% year on year, and we faced on the very specific issue of delay in loan repayment. We faced a temporary liquidity mismatch while executing very large projects, which in turn led to a further enhanced working capital cycle. At the same time, while we had a minor delay in repayment of our debt service, we have repaid in the first 9 months of the year about 230 crores of debt, which has already been repaid in the first 9 months. We are committed, we are strong, and we will bounce back.
Right, Mr. Jaggi, thank you so much for joining in. And while we respect, your commitment, what we need to understand are a couple of things. One, you claim that this was due to a short-term liquidity mismatch, but ICRA and CARE explicitly state that there were delays in debt servicing confirmed by multiple lenders. So can you provide proof that no such delays occurred? And all the falsifying claims, a question that was asked by Nigel, ICRA suggests otherwise. So instead of setting up just a committee, why not disclose all the repayments that have been made to clear your name?
Yeah, so of course. First of all, I will go on the falsification of the document which is there. There has been zero wrongdoing as far as we are aware, and we will continue to work with high ethical standards. The committee has been formed so that this is independent and we can allege the allegation which has been made on us for document being wrongly provided, that can be independently verified. It is in the best corporate governance standards that independent committee does the audit of this rather than me or anybody else. So that's the purpose of forming a committee. So we want to do that. On the fact of was there a delay in the debt payment? Yes, there was a delay in the debt payment, but we have also repaid 230 crores of debt in the first 9 months. I'm happy to provide through the stock exchange medium a complete breakup of all the debt that we have repaid in the first 9 months of the year, which aggregate to about 230 crores.
Okay, all right. If you're saying that all these claims about false documents are incorrect, are you going to take them to the court?
No, I am not, it has just happened. All of this has happened in a very short period of time. It is less than 36 hours and since all of this has happened. My immediate priority is to protect our operations. My immediate priority is to protect our customers, protect our team, and deliver to all our customers and our team. That is my immediate priority. The formation of the committee is being done, and we will go to the bottom of this and solve this matter.
Mr. Jaggi, you are speaking about your immediate priority being to protect your operations and your customers. What about your shareholders? Because remember, the same time last year, the stock was close to around 1,000 rupees. Now it's down to about 335. 85.5% of promoters' stake is pledged. What we need to understand is at what price were those shares pledged? How much cover do you have before these pledged shares come into the market as well? And would you have to provide any more collateral?
Sure. So on the share pledge side, we have 2 kinds of share pledge, and we have done a full disclosure about it about 2 weeks back to the stock exchange. I personally, me and my family own about 2 crore shares approximately in Gensol Engineering, out of which about a portion of it, large portion of it is pledged with our lending institutions, which have given us term loans. And the other portion is with lenders who give money against shares. For the lenders who give loan against shares, we have already provided them additional collateral. And now the additional collateral that we have provided is not in the form of Gensol shares, is in the form of other collaterals that are family owned. So from that perspective, our loan against share lenders have adequately been covered and are fully supportive. The first things that we did since in the when this complete rating downgrade happened is that we sat down with all the lenders over the last 36 hours. I have personally met, spoken, worked with all our loan against share lenders, with all our working capital lenders, and addressed their queries one by one on a Zoom call, in-person meeting, and ensured that and proved to them that Gensol is right on its track to becoming a good company. There will be minor blips. We will have some maybe short-term headwinds, but like I mentioned, we are serious businessmen and we will overcome this.
Anmol, we take what you're saying on board. You're reassuring your investors that all the shares that are pledged are unlikely to hit the market because you've provided collateral. Is that correct?
Absolutely correct, Nigel.
It's going to be a rocky path, Anmol, and we're taking all these clarifications on board. But I just wanted to tell you that the problem started when you went ahead and sold some shares in the open market. Now, given that the stock price itself is down close to around 50%, wouldn't it give them some kind of confidence if Anmol, his family comes in there and buys back some shares as well? Because for the time being, very low volumes have traded this morning itself, and the stock is at lower circuit. So is that a possibility that you buy back some of those shares since you've just sold less than a month or so ago? And secondly, on the outstanding dues, is everything in order right now? Have you made those outstanding dues good? Have you repaid something, say, in the last 48 hours or thereabouts? Because as of now, we understand that there are still outstanding dues. Promoter stake and outstanding dues. Please reply.
Yeah, so on the fact of me and my family going ahead and buying more shares in Gensol, I think we will be surely doing it. I cannot confirm the timeline of doing this, whether it will be done today, tomorrow, or next week, but it will be done soon. That is what I want to confirm. On the fact that do we have any outstanding debt repayments? We have a very minor, extremely small debt repayment which is still to be made, and we will be making it very soon. Extremely soon.
Just one more thing. You had some outstanding warrants, right?
Yes.
And you would have paid part of it.
Yes.
I think that was at a far higher price. So some part of it would have paid 25%.
It was at a price of 870, and we had committed that as founders, we will put in about 130 crores into it. We have already paid about 25%, which is about close to 30 crores onto there. And the rest 100 crores has to be paid. I think either we will, to regain the trust of our customers, either we will go ahead with open market purchase, or we will go ahead and infuse the liquidity into the business by subscribing to our warrants. But like I mentioned, I do not have exact timeline on it as we speak. But as over the weekend and over the next week, we will be taking concrete steps on this.
And those warrants were at around 870. You've already put 25%. You have 100 crores more. So you're committed to it. Either you buy shares from the open market with these 100 crores, or you go ahead and you fulfill that. Are we getting that correct?
Yes, sir.
But would it not make sense for you to actually commit to the company and buy it at 870 crores? Because if you're buying from the open market, none of the money goes to the company, and you buy those shares at a much substantially lower price. So that's a better deal for you as a promoter and not for those as shareholders. But be that as it may, you said, all options are on the table. We'll take account of that. I want to understand a little more about the business. You keep speaking about the 7,000 crore order book that you have, right? I want to understand, one, what are your current outstanding dues? Secondly, with this default that has come in, rating that has come in from ratings agencies, what does that do to your ability to access working capital and in turn execute these orders? What is your quarterly execution run rate likely to be? And is there any penalty if you are unable to service these orders?
So on the 7,000 crore order book that we have, it is a order book which has been created in the last maybe 4 to 5 months, which is there. Most of the contracts that we have won have been signed in the month of December and January of this year. While we have seen a steep increase in the order book, the timeline to complete these projects is 18 months. And and typically speaking, at the speed and scale that we execute, we can execute these projects in about less than a year. There is very good buffer time that we have to execute these projects.
But you will require financial resources to be able to execute these. And will you have access to that? What is your current debt like and how much is due? How are you trying to, manage the short-term liquidity issues while committing on this 7,000 crore execution? Is that a possibility?
Yes, sir. Sir, so I think if we will be making due on all our loan and we will hopefully get a rating upgrade in 3 months. That is what our conversation has happened. That if we service all our debt obligations on track for the next 90 days, we will get an upgrade onto our rating pack. And we are 100% committed to doing it. Once we do that and once we get a rating upgrade, we will get access to further more working capital, which is there. Meanwhile, at time, the promoter equity infusion will happen. We are, like I mentioned in the previous, in 2 minutes back, that we are committed to infusing more equity into the business, which will ensure, even though there is maybe some lack of working capital from financial institutions, but the company as a whole does not suffer, and we are able to provide every liquidity which is available to us as a family to put it into the business and run the EPC operations.
Okay, all right. Anmol, in the next 90 days, you're sounding optimistic about an upgrade. What is the total obligation you have in the next 3 months? Let's talk about near term. And how are you going to be getting that money?
So the obligation that we have on a monthly basis is about close to 20 crore rupees a month. And approximate, I'm saying, so is about 20 crores a month that we have, which means that we will need about 60 crore rupees in the next 90 days to keep all our obligations on track. And I think the current money that we have and the money that we will get from our customers, plus the promoter equity infusion that we will do, we will be able to ensure that we are able to pay the 60 crores on time. With the payment of approximately 60 crores, this number, with the payment of all loan obligations on time, the rating agency after 90 days will review our case again, and hopefully with the positive thing that there is no due obligation, we should be able to get a rating upgrade. At least not, I'm not saying that we will go to some BBB or something like that, but it will at least not be in the D category. And once we are out of the D category, we can start accessing financial credit lines from institutions again. So that is our strategy and plan.
What is plan B? That's question number one, if that weren't to happen. And secondly, what is your current available liquidity? Because you've announced, some sales in assets, etc., as well to raise some funds. How soon before you can liquidate them? Currently, what is the liquidity which is available to you? Not talking about how much you can raise to repay these debts, but as of date, what is the liquidity that is available to you? And what is your plan B if your upgrade doesn't come by and doesn't give you access to any sort of financial lines?
Sure, sir. So on the fact about how on the asset sales, we have had 2 asset sales that we have signed and that we have under execution. One is for sale of vehicles and the other is for sale of a subsidiary company. Both of these are going to get us 650 crores. The sale of vehicles is only going to make a reduction in debt. It is not going to come as cash in our hands. That will straight away reduce the monthly commitment that we have. So that is an important thing. The other 350 crores that we get by sale of subsidiary company, that will come as pure cash in the books, and that can be used to repay debt. That can be used as working capital. That can be used as for any things that are the best for the business. So between these 2 asset sales and a couple of more asset sales that we will announce in the coming time, I think we will have more than enough liquidity to take care of the monthly obligations that we have to our debt partners.
From this asset sale, how much money you get and by when do you get it?
So on the car sale, it is a loan takeover. So there we will not get any money, but the loan will get reduced. But when the loan gets reduced, we will be able to our monthly commitment to EMIs will go down. So that is one. 2, on the other subsidiary sale which is there, we are expecting a partial payment in the month of April and a partial payment in the first half of the year. So there will be 2 parts of the payment in the subsidiary company sale. One is in April and the other is in 3 months or 4 months after that.
All right. BluSmart, your other promoter-linked entity, has also defaulted on its NCDs. How does that affect Gensol's liquidity? And I'm looking at your shareholding pattern. A little over 1% is also held by ED Raipur. Can you explain why?
Yeah, so I will first go on to BluSmart. So BluSmart has been doing extremely well. It has earned a lot of customer love, and I think now it is now available in Mumbai also. BluSmart has been growing 80% year on year and has also decreased its losses by 15%. All debt servicing in BluSmart is absolutely current up till date. There is not even 1 rupee outstanding to any lender as we speak, or to anybody as we speak. The rating is and in BluSmart we have announced a 400 crore rupee round. Out of the 400 crore rupee round, we have already received more than 75% in our bank account, and the balance money also we will receive soon. With the infusion of this equity into BluSmart by all our respected investors, BluSmart is absolutely strong and is running on its feet and is actually growing at a very fast speed. Like I mentioned before, that year on year, BluSmart has grown by about 80%, and we will continue to grow on the same growth trajectory.
Okay, all right, Anmol, we appreciate you joining in. You know, from a share market perspective, there are close to 10 lakh shares that are pending at the lower circuit. You've given us your clarification. We hope to have you back on the channel, say in the next 90 days or so. And we'll try to reconfirm all the commitments that you've given. But for the time being, thanks a lot for joining in and fielding all our questions and taking all the viewers' queries as well on board. Thanks a lot for joining in. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.